GM, what up, everyone? Welcome to Music NFT Radio. Retweet the room. Let's go. We're back with another episode of Music NFT Radio Podcast. Thanks for listening. If you're on YouTube, make sure to give a like and subscribe to the Music NFT Radio channel. You can get it on podcasts and come hang with us 24/7 live on Twitter Spaces. And today we have another special guest, one of our VIP collectors and one of the OG supporters of the Crypto Rich NFT. We have Kyle Sonlin from STO Market here to talk about the future of digital securities, real-world assets on the blockchain. I have a lot of experience working in this myself, not nearly as much as Kyle, but more than your average NFT artist, I would say. I worked for a company called Vertalo for about a year doing marketing, working with securities and regulated assets on the blockchain. But Kyle is here, and he's my go-to expert on this subject, as well as a VIP collector and supporter of my NFTs. So Kyle, really happy to have you here on Music NFT Radio. Welcome.
What's up, everybody? Dill, thanks so much for having me on. I'm a huge fan of everything that you've been doing. You are a visionary in this blockchain industry. We've been talking now for years, I think, talking about a lot of these different subjects, about how we can empower entrepreneurs, which I put all musicians and artists in that category. I have a bunch of friends, including you, that we've talked about this before. I totally see how artists and creators are entrepreneurs. They're building their own businesses, creating their own IP, and in a lot of ways are wearing a ton of hats with regards to building and operating a business and generating income streams so they can keep moving forward with their passions. And so I'm a creative guy, but most of the time I'm working in the weeds of the blockchain space. Been in this stuff for quite some time now. This is not my first bear market, and I am still bursting at the seams with passion and excitement about some of the cool technology that we can dive into today, as well as what it actually means for real people in the real world. So I'm just happy to be here. Thanks again for having me on. And yeah, I'm a VIP member of your club and a huge supporter of your music and the initiatives you've been moving forward with and will continue to do so moving forward. So anybody else, if you are on the fence or you're interested, definitely check out Dill's collection, because this guy has put more work into driving value to his community and helping empower the world of NFTs more so than really anybody else that I know in my network. And just have nothing but great things to say about you and what you put together here, man.
Well, thanks, Kyle. I really appreciate the support. I appreciate all of that. But today is about you and your story. And I so agree about what you said about being an entrepreneur, right? Whether you're a creator, an artist, a business person, doing something, marketing-wise, you're an entrepreneur in this space. And I think that this is kind of the ultimate landscape for you to build your own design, your own scaling model, your own business around Web3 and NFTs. And so I think what you're doing especially is something that's going to allow the traditional businesses and traditional models to be fit into the Web3, NFT, and crypto ecosystem. And to me, that was always something that I knew would be super valuable, right? How can we get these old, antiquated, traditional, paper-based models onto the digital global blockchain with 24/7 markets, right? I mean, just getting into crypto, I remember how cool it was that you could trade 24/7. Like, that's mind-blowing when you first get in, right? But you've kind of helped pioneer forward one of the most important areas of the space, which is the regulated area, the area that is following all the laws, bringing real assets into the picture, and eventually is going to be probably one of the biggest segments of crypto and NFTs, if not the biggest one day. So why don't you just talk a little bit more about your journey and just your beginning getting into crypto and how you got to where you are today, really?
Sure. Yeah, that's a great introduction. Just even before I get into my story, I work with security tokens. You're going to hear me use that word quite a bit. when we're talking about security tokens, really my industry is investment banking for blockchain. And so I'm not an investment banker myself, but if you think about what Goldman Sachs or JP Morgan or MUFG or Nomura or any bank around the world or any government around the world, any financial infrastructure provider around the world, how they're leveraging this technology is not through NFTs. And I think that not to disparage that, or not to disparage crypto, or not to disparage DAOs or these types of things, which I think have a place in our ecosystem and in the economy. These banks, these financial institutions, they're going to be dealing with a lot of regulation, because they already do, right? But B, they're going to be working with real investments. They're going to be talking about, all right, ownership in businesses. They're going to be talking about bonds. They're going to be talking about stocks. They're going to be talking about real estate. A lot of these types of assets that are heavily regulated. And a lot of people in crypto talk about how the regulation is a bad thing. And while it can be a burden, and it's kind of inconvenient, and certainly there are plenty of criticisms you can make that it's not necessarily the most nimble, it's not the most progressive in terms of how our standards change over time. The one thing you cannot debate is that it hasn't been really successful, right? You look at the US economic system, and over the last 250 years, we have been an economic superpower that no one else has been able to touch, partially, thankfully, due to the fact that we have a lot of infrastructure that allows us to move at scale. And that's the really the big thing here, is when you're talking about billions and trillions of dollars worth of assets, you need to have the proper infrastructure. You look at Aluna, or you look at the Terra ecosystem, or even Lido Finance with their staked ETH, which we're having issues with right now, or even you look at some of the centralized parties dating back to Mt. Gox, or even to today, when we're seeing there's some issues with withdrawals between companies like Celsius and others. And who knows if they're actually having serious issues or if that's just short-term liquidity problems. But these are things that happen at scale. When we have billions and trillions of dollars at stake, you need to have strong structures in place. And so when you have strong structures, that tends to mean that they're not quite as nimble, they're not quite as flexible, but that's the trade-off that you're making. And especially when it comes to ownership of real assets, where we're talking about a house that somebody needs to own. That you can't just steal that house from me because I misplaced my private key. We can't have a system where, if I owned 10% of Uber as an early stage investor, that just happens to get lost because I collateralized it in a protocol and now it's gone, right? We can't have these systems working for real assets. And so when I talk about security tokens, I'm not talking about security like cybersecurity or all of that kind of stuff. I'm really talking about security as in the SEC, the Securities and Exchange Commission here in the United States. I'm talking about investment contracts, real assets. So that's where I come from an investment banking on the blockchain perspective. But a little bit of background on me is...
Thank you for that, Kyle, because that's a really great clarification. I think a lot of people do get confused on that. And so, securities dealing with the regulated assets, not just dealing with, blockchain security, basic stuff like that. So thanks for that clarification.
Right. For sure. And so I think the other side of the miscommunication, or sometimes where people are confused, is that I, as being one of the biggest proponents of using investment banking on the blockchain and using and utilizing a lot of the infrastructure that we've been able to build within smart contract infrastructure and within transparency of these assets and how they move. A lot of these types of things that we love about crypto can be applied in these industries to prevent some of the things that we saw with GameStop or AMC or other examples, right? There are systemic issues inside of the current structures, and that's what we're striving to help recreate and rebuild in this new system. And so the one misconception I think that I like to always start off with as well is that I'm definitely not somebody that's advocating that every crypto and every NFT and every stable coin is a security, or that those things should be regulated. I think my perspective and where I come from and where we're going to talk, I think most of this conversation today, Dill, is actually just about how this is a new and different side of the industry that if we as a crypto and blockchain industry embrace it, it will allow more freedom in the NFT space. It will allow more freedom in the crypto space because we are complying with regulations through a separate investment asset. And so I think that there's a lot of cryptos where regulators are looking at them and saying, oh, these cryptos are securities. Well, if we offered a security of that company, then that would be the one they focus on. And then they're not going to be focusing on the crypto that we're participating in, the blockchain industry that we're using. An NFT doesn't constitute a security if it represents access. But then we have people that want to have revenue streams attached to NFTs. It's like, well, let's issue one asset that gives you revenue in these different creative works. And that's the one that regulators will focus on as the investment. That's the one that you can shout from the hilltops and say, yes, this is an investment. This is revenue. Like you don't have to pretend and be in the gray area. If you issue two separate assets, one that represents the access or the DAO or whatever, and or both, maybe you do two different assets, one that's access, one that's a DAO, one that's a stable coin, and one that's the investment in the underlying IP, in the revenue streams that investors can get exposure to. Because even from my perspective as an investor, I wish I could buy a share of the Ethereum Foundation. I own Ethereum, but I also would prefer to also own a share of the Ethereum Foundation, right? I'd like to own the equity or the IP in the underlying foundation and what it's built. Same thing with any of these different platforms. And so not offering that investment is just missing out on a huge opportunity to build a more robust financial system. And not to mention, securities are nice because there's actually something behind it. So in a bear market, you're not going to see quite as deep swings. Right now, our security token market is not nearly as far down as what we're seeing in crypto. Why? Because it's actually backed by something real, so that when these prices come down, people are still holding it for a long-term reason, as opposed to some of these cryptos that it's more about kind of capitalizing on the flavor of the month, if you will. So those are some of the, I think, the fun things that I like to talk about with regards to security tokens and how they actually complement the rest of the blockchain industry.
Yeah, I really like that. I mean, you have a great point there, which is kind of there's two sides to it. You can still have your decentralized community and some assets related to that, but maybe the full Web3 stack of the future does involve having fractionalized shares of your equity that are available through security tokens. So yeah, I mean, I definitely like that sentiment. And of course, you know how it applies to music with the royalty splitting and all that stuff. But we can get into that a little bit because I like what you're going through here, just kind of breaking down some of the misconceptions, some of the misunderstandings, some of the language we need to even have this conversation, right? And this is very new. I mean, it's a whole different world from crypto and NFTs. And there's so much information behind this regulated world. I mean, probably even more than there is under crypto and NFTs. So it really is a different animal, and it requires a lot of education just to even have a discussion about it, right?
Yeah, no, I think unfortunately the reality of the situation is that the one thing that certainly makes it complicated for security tokens is that it's just more expensive on average than creating an NFT or a crypto, right? Because as we tell our clients, we work with quite a few different clients here. I'm based in Miami, Florida. I've been here in Miami for I guess 7 years now. And so what we tell our clients here is, there is an expense associated with doing a security token, but most of the expenses associated with doing a security token are on the security side. Actually making the token is the easy part. So that's where like NFT creators have been able to do cool stuff, because making, NFTs on OpenSea literally is just paying the gas, right? You make the graphic, and then you mint the NFT collection, and you can begin selling. Versus the minute that you start attaching real assets to it, now we need to involve legal counsel, and you're going to spend tens, potentially with an S, maybe up to $50,000 or $100,000, depending on what deal you're talking about here, in legal fees. You're going to have to work with compliance and fundraise appropriately. It adds time. It takes effort to do these things. And that's just because that's how the financial system is structured in order to protect investors. Because of the fact that when we're selling real ownership in something, We need to be sure that the something that you're selling is what you say it is, right? I can't tell you that I'm selling you equity in my company and then not give you equity in my company. Or I can't tell you that you're getting something and then you're getting something else instead. So there's a lot of compliance that goes into this, which is why a lot of the adoption of security tokens is happening less on the retail side and more from institutions that are already doing these processes. They're already used to those fees, and now they're just capitalizing on the savings that come from smart contract integration, which for me is probably one of the biggest benefits of blockchain technology, is the fact that we can now automate things that we weren't able to automate before because we couldn't trust the data, right? As we talk about with blockchains just verify data. And so one value of verifying data is now we can automate processes that could only be automated if we had verified data. And that sounds a whole lot like investment banking, right? Goldman Sachs hires thousands of people out of college, and literally their only jobs is to copy information from one Excel spreadsheet into another one. Why? Because they can't trust somebody else to do it, and they need to keep it in-house. But you could essentially replace all of that manpower, and human capital by automating those processes in the same way that we see production be automated in making cars or making anything now is automated. You see automation happening in all different types of industries. There's no reason that finance shouldn't be an industry that's automated. It's just that sensitive financial data you have to be very careful about. You see Equifax or credit card companies get hacked and then like millions of records are stolen. We cannot have that happen with regards to the ownership of assets. And so we can only do it if we're sure the information is verifiable and secure. And that's where the blockchain adds a lot of value for investment banking. And so that's kind of the way that I look at how security tokens are happening. And then over time, as they become more popular, like with what we're doing with Security Token Market, which is my business, we're going to be conducting a crowdfund where we are actually allowing anyone around the world to be able to invest $100 into actually investing in our company and participating in this journey alongside us. We've been in this industry for years now. We've got millions of impressions across our social media and all of our production that we create. We track all of the underlying data of this market around the world with tens of thousands of people checking out the website every month. And we're the ones that are kind of trying to track and monitor what's actually going on from an investment banking perspective. And so what better way help drive this industry forward than to drink our own champagne and to get this thing kicked off.
Yeah, that's awesome. I mean, for me in this space, it's like if you have a company in this space, you should be using the technology in some way. And that sounds like a great way to use it. That's cool that you have $100 on, is the minimum. And that's awesome. And I think this is one of the most relatable parts, one of the best things to talk about, I think, for the podcast too, is this is going to open up really different, high quality, alternative type of investments to a lot larger crowd, right? And so maybe you can talk a little bit about how one of the goals here is to make investments more accessible to the general public instead of being kind of like this complete, who you only know who you know, and you can only find the best deals if you know, right?
Sure. Yeah, exactly right. I mean, I think that when you look at investing in startups, this is something that everybody loves the idea of because the venture returns are astounding, right? You look at the famous story of Jason Calacanis, who invested in Uber in their first round. I think it was a $25,000 check that turned into nearly $125 million at the time of their IPO, or something ridiculous like that I've seen in tables and graphics sent online, right? So people want access to opportunities like that because a lot of us have used Uber before, right? A lot of us were using Snapchat before they went public and would have loved to be able to invest. The problem is that they don't make it accessible to the average person. There's a few reasons for that. The first one is that right now, and the kind of the standard is that they don't take small checks. So the average person isn't able to invest $50,000 or $100,000 into a deal. And so because of that, they're already just not qualified because they're not ready to make that investment. Then there's all kinds of restrictions around making sure that you're accredited or X, Y, and Z. And those are processes that limit over 90% of American investors, let alone international investors, from participating. And so we're trying to break down the walls of Wall Street by making anyone able to invest, whether you're accredited or not. It doesn't matter to us. We're using the regulation crowdfunding exemption as allowed and approved by the SEC to be able to use for companies to work with a broker and raise money from the crowd. And then on top of that, never before have you been able to actually trade that on a secondary market. And that's where the tokenization piece comes in, is that we're going to be selling our equity through a vehicle that we're issuing on Securities. And then you're going to be able to participate and then trade this thing just like a stock on their market and on markets around the world. You can actually hold your security token in your MetaMask wallet the same way that you would hold your crypto, the same way that you would hold your NFTs. Hold it in your MetaMask wallet, and then be able to trade that on exchanges that are able to support that, which of course it won't be Coinbase, because Coinbase doesn't support real investments yet, but there's dozens of different exchanges around the world that are going to be able to trade these assets. And you're going to be able to do it the exact same way as crypto, using the ability and the ease of use of these technologies while applying real asset investments to it to help build a well-rounded financial system. And I think that if there's one phrase that I can use that maybe helps really drive the point home, it's that we're alongside the rest of the industry. This is not just me. I'm not an exchange, and there's certainly a lot of people doing heavier lifting than I am that are brokers and that are regulated and are going through a lot of these pieces. But we collaboratively in the security token industry are really trying to build the stock market of the metaverse. And so I think that hopefully that helps really try to drive home the point that we're making here of how there are different types of assets that complement each other, right? Gold trades on a market, and so does Amazon stock. Neither one of them is trying to be the other one, but both of them absolutely need to exist in a financial ecosystem. And in the same way, we're trying to build a stock market for Web3.
Awesome, man. And yeah, I think it's awesome that this is basically going to open up the market, because to be an accredited investor has some pretty big requirements. You need to make, I think, $250,000 in a year or have more than $1 million in assets. Is that right?
Yeah, I think it's 200,000 for an individual, or 300,000 if you're married. And you're right, or it's $1 million in assets that doesn't include your house. So it's you need to have, on top of your primary residence, you need to have another $1 million worth of assets. It's very exclusive, and it only hurts the retail investors, because then the rich guys are essentially able to invest in all the deals that everybody else isn't able to participate in, and we're hoping to change that.
Yeah, I think that's really important, really cool. And something that I certainly want to start getting into is finding some of these investments, getting involved, because, I like the industry, I know about it, so I should be out there making moves too, and living it like you are. You're building the space forward. So it's really awesome what you've built. And I know that you have some of the highest quality content in the space. I mean, we did an interview at the Vertalo DAS conference, and that came out really great. Anyone can go watch it on YouTube. If you look up Digital Security token, I'm sure you'll find it there. So yeah, Kyle, I love what you're doing. I love that you're tracking all of the assets in that space as well. Do you have any plans for tracking any type of NFTs, or maybe ownership linked NFTs, or maybe some of them would qualify as a security token?
100%, 100%. We're a data company through and through. And so that's actually where the crowd fund is helping us out, is that we were able to raise some capital and bring on a few developers who are hard at work in rebuilding our entire site. You can see that at stm.co. And we're tracking all the trading prices, as you mentioned, of real security tokens that are fungible assets. But you make a great point around tracking a lot of the other parts of the market that are also incredibly valuable. And that's where we're hoping to bolster our resources to be able to bring in more data and make better reports, make better analysis, and hopefully can collaborate with people like yourself, Bill, to start figuring out how we can make reports that will help drive more credibility to the industry and drive insights into some of the best projects that are actually adding value to the marketplace, as opposed to just representing digital art, which I find is only a very small subset of what this industry can actually provide to everybody in the public.
Yeah, for sure, man. I mean, definitely, I'm here for it, and I love that idea. I think that having some clarity and some tracking and just a way to organize all this stuff is really important. And also, I think going forward, it's going to be huge just for the digital securities space to have that data and those analytics, and to be able to see what kind of returns you can get on a particular investment and the performance metrics. So I think that's all going to be really cool and super valuable as this market continues to grow. Do you have any ideas like about the growth of the security token market? I mean, how did it do during the last bull market? What do you think's in store for the next couple years for security tokens?
Yeah, the great thing about securities is that these assets already exist. So when you look at crypto or NFTs, they have to create value for their investors, for their network, for their communities, versus when we're talking about securities, most of these assets already exist, right? If you're taking $1 billion real estate portfolio and you want to create a security token behind it, you just tokenize that asset and bam, there's $1 billion worth of assets that have now been brought on chain, because securities have real assets behind them and can immediately contribute to the ecosystem, unlike with crypto where they have to create all that value in order to grow and scale. And so we saw a boom in over the last 6 months or so. The market cap has nearly 10x because we've been able to bring on a ton more assets onto the network and onto the blockchain so that anybody can participate. And so we're expecting a significant boom to continue because of the fact that security tokens are very different than crypto. And so market cycles don't affect it the same way. The reason why is because Bank of America Merrill Lynch, for example, is still settling securities. They're still trading these assets. There's still plenty of volume on the stock exchanges and in their asset management ranks. So they need to figure out ways to improve their settlement system. And so basically the pitch for security tokens for these large banks and asset managers is like, hey, we can save you 5-10% on this process if you use technology to improve your systems. And so for them, it's less about the actual investment and how the asset trades, and it's much more about actually how the trading process is executed. It's how the process is done, and you can revolutionize the way that the process is done regardless of the price, which saves significant costs for these banks, which is only more valuable when their assets are going down in price, right? If they're losing money on their trades, they can actually make back up some of that book by saving costs on the other side and preventing some of the bottom line damage. So I think that for the security token industry, we've seen healthy growth. The industry is fine. It's not changing very much because these developments are still happening. Investment banks aren't looking at a 1 or 2 year cycle. Goldman Sachs or JP Morgan, literally JP Morgan, the actual guy, bailed out the US government in the 1800s. This guy actually gave the US government a loan, right? Like, this bank has been around for hundreds of years. They're not looking at the next 3 years of a cycle to dictate their decision making. They're looking 10, 20, 50 years in advance, and they're going to see that the savings over those time periods by leveraging technology are way, way too large for them to ignore. And we've seen the market continue to grow at a significant pace, and I would not expect that to change anytime soon.
Definitely, man. I mean, when it's backed by real world assets, you definitely have more stability. So, yeah, I'm really, this is a lot of information. I'm glad I could have you on the show to explain some of this. And I definitely want to keep having you on because there's so many different topics we could cover under this. So happy to have you here. And also, you can come back with any client or project that you're working with. If you have something cool you want to get some coverage for on the radio, That's what we're here for. You're a VIP. I'm here to support you. Is there anything else you wanted to share before we wrap it up?
Stay positive. Stay positive. Reach out to me if you have any questions about any of this stuff. I've been in crypto for forever. And so if you have questions around crypto or NFTs or how this stuff works, I'm incredibly logical. I know the technology behind a lot of these things and can kind of help sort through a lot of what is crazy in this market and a lot of misinformation that's going on, or even just misunderstanding, because it is pretty complicated. But stay positive, people. Don't worry about what's happening in the short term. Look at this stuff for the long-term benefits that we're building and keep working towards those things. And as always, keep supporting Dill, because this guy is busting his butt in order to provide as much value as he can. And I've seen how much he's grown, and he deserves all the credit in the world. So thanks again for having me on. I love doing interviews with you. I love supporting you. Whenever you want me on for content, consider me there, man. I love supporting you. I'm only a text away.
Hell yeah, man. Appreciate it. Let's get it, everyone. That was another episode of the Music NFT Radio Podcast. Make sure you're following Kyle. Make sure you're following STO Market. Go check out the website. See some of what we're talking about in action. There's some cool stuff over there. You can learn a lot about the market. And who knows, maybe you'll buy some real estate on the blockchain. So let's get
That's
back
the
to
future.
if you're listening on YouTube, make sure you're subscribed. If you're on the podcast, come check us out 24/7 on Twitter. Let's go. Kyle, thank you.
Thanks, Dill.
Peace. Let's get back to it. Back to the radio vibes. You know what it is.